My name is Sharon Arnold, and I'm an insurance specialist with the Louisiana Department of Insurance. Today, we're going to do pretty much a presentation on disaster recovery and the role of insurance following a disaster. Next slide. Right now, can you see, as you see, we have a picture of our commissioner, Commissioner James Donnellan. And on behalf of our commissioner, Mr. James Donnellan, we would like to take a moment to thank GOHSEP for allowing us an opportunity to be a part of this great event as we all join forces to aid and assist individuals with their recovery efforts. Next slide. We must do a disclaimer, and basically it's just saying that the information in today's presentation is just simply an overview. The information on today is not to be used to provide any specific legal guidance or advice. So if there's any issues that you may be currently involved with, we stress that you please contact a lawyer for any legal advice regarding your matter. Next slide. So what we're going to do on today, we're going to first explore the role of insurance and how it plays in disaster recovery. But we wanted to take a quick overview of the basic structure of a homeowner's insurance policy and the way it works. So basically, what is homeowners insurance? Well, basically, it's a policy that combines your coverage against the insurance property being destroyed or damaged by various perils, and perils are simply hazards or events that are a source of a loss or damage. Examples of perils would be a fire, wind, hail, lightning, water, and even theft. And also that policy provides coverage for a liability exposure caused by the insured. So your homeowner's insurance policy provides coverage for two things. Coverage for your property being destroyed, and also liability in case somebody may be injured or harmed while on your property. What we want you to take away from our presentation today is read your policy. That's one of our main key takeaways on today. Read your policy. Understand what your policy is saying. Understand the policy language. It's very important that you understand the policy language. A lot of times we have situations where consumers call on the Department of Insurance and have us to look into claims that they felt was not processed correctly. And sadly to say, those claims were processed correctly. It's just that the consumer really didn't understand what all was included in their policy. So on today, we stress to you that we need for you to definitely read your policy and understand it. Hey, if you don't understand some of the verbiage, we're the Department of Insurance. You can call us, you can contact us, and we'll try our best to assist you in that matter. Or what you can do is contact the company or contact your agent of service, and they'll be more than happy to assist you. Another thing that we want to bring out to you that will be quite helpful to you in understanding your policy is to use that declaration page found in your policy. That declaration page is a page that tends to summarize some of the basic contents of your policy. Not every important detail in that policy is going to show up on that particular deck page, but the things that you need to know as of your coverages, your policy limits, the name of your agent of service, those things that you need, that you may need right away. That stuff is there to be able to assist you in case of a disaster. And one thing else we want you to take away for sure, and that is what the principle of indemnity is. That is basically a contractual obligation that the insurance company has toward you to bring you back to wholeness, to restore you to the same condition as before the loss. They're not set up to make you better than you were before the disaster or before your damages occur. Their job is to bring you back to whole level, back to the condition you were before the actual loss. Next slide. Once again, I want to reiterate about that deck page. I know when disasters strike, first thing, you're at a loss. Your mind is probably all over the place, and you're searching and you're trying to figure out, where's my policy? I need to get my information so I can see what I need to do. Hey, we want to stress, hold on tight to that declaration page, because that page knows the most pertinent information regarding your policy. And also know that when your policy has to be renewed and you have a mortgage, your mortgage company will require that you provide an up-to-date declaration page, so that they can make sure that you're keeping adequate financial protection on that home through the duration of that mortgage. Okay, so this we can't stress enough from the Department of Insurance today that the homeowners insurance declaration page is going to be your best friend, especially during the time of a disaster. Next slide. So let's look at a policy real quickly so that you'll have, I want to breast some of you all who may not understand how the policy is set up, and then to refresh some of you all who may already know how the policy is structured. Your policy is structured into two sections. It's a section 1, it's called property coverage. Your section 2, that's your liability coverage. So we're going to go through the ABCs of the insurance policy real quickly. Coverage A is strictly your dwelling, and that is the dwelling portion of your insurance that covers the physical structure of your home. That's the walls, the floors, the ceiling. The coverage protects you, the coverage protects your home from damage to the actual structure and anything that is permanently attached to the structure. Okay, so like you have fixtures in the ceiling, those things will all fall under your coverage A. Your coverage B is other structures such as your fence, your sheds, your man caves, your detached garages. All those things will fall under coverage B. Anything that is not attached to the home falls under coverage B. Your coverage C is your personal properties. We always say this sometimes to our classes that we teach. You take your home, if you were able to, turn it upside down. Everything that falls to the floor, that's considered your contents. And those are the things that are going to be covered under your coverage C. Coverage D, that's loss of use. I'm sure some of you are familiar with the loss of use, especially in the area that we're focusing on now with the Calcasieu and Cameron situations that you've had. Loss of use is very important. If you don't have it on your current policy, we ask that you need to get that, because you never know when a mandatory evacuation is going to come into play, and you need to have some place to go. We can't always go to our relatives. They may not have the space for us. So, hey, you need to see about getting the additional living expenses, because it will provide you with a place to stay, whether it's a hotel or an apartment. Especially if your home is being repaired, it's going to provide you with coverage to be able to stay someplace. Now, keep this in mind. Don't expect your insurance company to pay for your stay at a 5-star spa and resort. Okay, come on now, let's keep it real with this thing. We got to stay in a place that is more conducive to what the insurance company is expecting us to do. And most time they may have a list of companies, of hotels that they would prefer that you stay in. So we have to keep in mind that this coverage is only to be used when your home is uninhabitable and you're not able to stay in your home. Then there's section 2, which is your liability coverage. You have 2 coverages that you find under your liability coverage, section 2. You have your coverage E, which is personal liability. That was for times when people might want to sue you for something that may have occurred at your home. This particular coverage has a higher limit of coverage that will be there for you in case anything happens and that you are legally responsible for. Then you have your coverage F, which is medical payments to others when somebody falls at your property, or somebody dog may decide that they want to chew on you instead of their bone. Hey, this is what you need to have to be able to take care of those medical payments. Okay, next slide. Endorsements. There's a lot of times, I'm sure, in the past that we wish we had certain things on our policies and we didn't have it. And you know, your policy can always be adjusted. So this is where endorsements come in at. When you decide that you want to make a change to your policy and then adjust your coverages. Now keep in mind, when you get endorsements added to your policy, because most time a basic policy is designed for the average homeowner, okay? But when you want to make some endorsement to modify some of the coverage under Section 1 or Section 2 in your policy, then this is called an endorsement. For example, you may want to add coverage for a valuable piece of jewelry or an expensive artwork. Well, this is called a scheduled personal property coverage, okay? Or personal article policy coverage. And note that when you add these expensive pieces of content, you may have to, it's based upon the insurance company, you may have to provide a receipt or you may have to provide a appraisal. It's totally up to the insurance company how they want to handle that. But this is a time where you can go in and you can make adjustments to your policy. Hey, I may want to go from an actual cash value to now a replacement cost. Hey, contact your agent, make your changes. I may want to have coverage for sewer if it's backup sewer if it's not on my policy. This is where you make your changes. You know, think about the things you went through with the prior disasters that you had to deal with, and see what changes you want to make. And within your budget, see if you can make those endorsements for whatever things that you see you want to add to your current policy. Okay, next slide. So then we have on our policies exclusions. Well, exclusions are cases for which the insurance company does not provide coverage, okay? This is a list of examples of some of the exclusions that we find under our Section 1, our property coverage. Number one, I say it's a few of them. I'm just going to go through a few of them with you today. Flooding is one of them. Flooding is not payable under the homeowner's insurance policy, with the exception of if we have wind damage and it tears that roof, it destroys our roof, guess what? And the water comes in from the roof, then yes, flooding will be covered under your homeowner's insurance policy. Other than that, flooding, it has to be, you have to obtain a flood insurance policy for anything coming in from the ground. It has to be, it's going to be covered only by a flood insurance policy. Neglect and maintenance is another one I want to bring across to your attention. It's your responsibility to preserve and protect your property from any losses. Okay, for example, I may have a tree out there in my yard that I don't get the roots checked out. You know, when I moved into the home, I didn't get the home inspection done on the tree, although it's on my property. I need to see what condition that tree in, because if that tree has dead roots to it, it's a possibility that the insurance company is not going to pay, even if it causes damage to your property. So your job is to do certain things to your home, maintenance, preventive maintenance, because if there's shingles, they can tell if those shingles that blew off of your home and caused the water to come into the home, if that was something that should have been taken care of years ago. So I say to you all today, do the preventive maintenance on your home so you can not worry about if something is not going to be paid for in case there's a loss. Okay. Intentional loss. Intentional loss is basically saying that I saw some windows that I wanted from Window World, so I'm gonna get me and my friend or my cousin to come in here and just kind of like damage up these windows so I can get the better windows. No, you can't do that. You can't do intentional losses. They will not pay for that type of the claims that you want to file, and they can tell if it's something that's been done intentional, off of your direction, off of you saying, I just want better. No, that's not the way we do it. That's not the way insurance companies work. So these are just some simple exclusions under Section 1 that we need to be, conscious about. Next slide. Section 2 is liability. These are some things that they're not going to pay for, especially once again, if it's under your direction and you cause damage or injury to something, they're not going to pay for that. Motor vehicle or watercraft, it's your boat or your car. If your car may happen to bag your car into, and not and it's accidental, into your carport, you hit the gas instead of when you're bagging up, you hit the gas instead of taking your time bagging up. hey, that is something that you would have to look into your auto insurance for either item, your motor vehicles or your watercraft. Okay, next slide. So we have types of deductibles here. With any insurance, we have to 9 times out of 10 deal with a deductible. Okay, and deductibles are simply the policyholder's responsibility, and they usually apply to section 1 and not section 2, meaning it applies to your property coverage, but it doesn't apply to your liability coverage. So let's just look at how you may have noticed that some of the deductibles have been assessed on your claims prior. It could come expressed as a fixed amount, or it could come as a percentage. A fixed amount is like a flat amount, $1,000 for all perils, or it could be $1,000 for wind and hail deductible. Or because I've noticed on policies lately, people are now not always being charged the percentage amount. They're being charged the flat amount, the fixed amount for their deductible. So the deductibles can be expressed in two main ways: fixed amount or percentages. Okay, there's only one deductible applied per occurrence. Okay, so every time there is an event, a deductible shall apply. Each time they have, we had a hurricane to come through, or say for instance you had a fire at your house, that's going to be a deductible. Okay, the next time you had something to happen, it was a hurricane. Okay, that deductible is going to be applied. So it's always applied per occurrence. All perils deductible, like I said, it may be a set amount or a fixed amount. Your wind and hail deductibles are usually 1 or 2% of your coverage A, which is your dwelling amount. Okay, your hurricane named storm deductible is usually 2 to 5% of your coverage A dwelling amount. Okay, declared hurricane or named storms, they all will fall into the 2 to 5% amount. Keep in mind, we have statutes that the disclosure, required disclosure, is basically saying that the companies are making us aware that how the deductibles are going to be applied to our claims. Okay, and one hurricane deductible per year. Another revised statute, under revised statute 22-1337, says only one hurricane deductible can be applied per year. Louisiana revised statute 22-1332B6 says the company has to disclose how they are going to apply their deductibles for any given claim. I mean, or basically just disclose how they're going to administer their deductibles. Okay, next slide.
Sharon, can we stop? We actually have a question regarding that. And I know that 2020 was a very unusual year to be in Louisiana with all the multiple storms. Can you kind of explain a little bit more about the one hurricane a year deductible and how that relates to people that may have been hit by both Laura and also Delta?
Okay, in Laura, I'm gonna use for example, if somebody had to meet a $5,000 deductible for Laura, okay, that means when Delta came through, and they met that $5,000 deductible, then what they were going to do then under Delta, they were going to probably apply an all perils deductible. Okay, it's only one hurricane deductible per year. So they applied the $5,000. I'm just using that for an example. They had a $5,000 deductible off of the damages for Laura. They met the $5,000. Okay, well, when Delta came through, then they didn't have to apply a hurricane deductible, but they probably applied a all perils deductible. So an all perils is different from a hurricane deductible. So the company is still allowed to apply either or. If I hope that helps.
Yeah, and I think what it is I think that some people, I mean, everybody knows that they have to have insurance, but break it down even further about really explaining the process. So I guess if it's not enough just to know that you have coverage, you really need to understand what the perils means, what the deductible schedule is. And I mean, you did also talk about knowing your limits in the declaration page, but of us know we have to have it, and we're just grabbing that. They really need to get more customer service for their insurance agents and make sure that they understand their policy. Is that correct?
Exactly, Ms. Ruby. Definitely. They definitely need to sit down with somebody so they can know when each event, whatever event occurs, whether it's a hurricane situation, whether it's just a wind and hailstorm that came through, whether it was a fire or water damage that they occurred with their hot water heater, they need to understand how the deductibles will apply. Okay. And let me run through that real quickly. If it's a hot water heater damaged at your home, that's considered water damage. That falls under all perils. Okay. Well, if there was a windstorm or a hailstorm that came through, hey, there's a deductible that applies to that. That's the 1 to 2% deductible. Then if a hurricane, if it's a named storm, it's a hurricane, Hurricane Laura came through, then some companies will say it will range from 2 to 5%. So it just depends on what is going on at the time, how it's going to be applied. However, if there's 1, 2, or even 3 hurricanes in the same year, and you met your deductible with that first hurricane, those other 2 hurricanes that come and cause damage in that same area, you still have to meet a deductible. It won't be the hurricane one, but you'll have to meet an all perils one.
All right. Thank you for explaining that. I'm going to go to your next slide.
Okay. Thank you. So let's look at flood insurance. Let me say this to you guys, is that flood insurance is definitely, we get a lot of questions, but it is not regulated by the Department of Insurance. Flood insurance is a federal product. So we have no jurisdiction over the flood insurance. Homeowners insurance policy, as I stated earlier, does not cover flooding unless the situation given with the roof damage. Okay. So that's why we need to stress on this particular slide here that you need to obtain flood insurance. It's very important. Now, let me say this about flood insurance real quickly. Flood insurance, it doesn't pay the way homeowners insurance pay in so many, and that would be really and truthfully a class by itself, because it can be kind of detailed as to when I say it doesn't pay. Their maximum limits are much lower than a homeowner's policy, because damage is usually limited to a few feet from the floor, whereby it's different when you're dealing with damage with a homeowner's insurance policy. But flood insurance pays for damage to property caused by flooding as described in their actual their policy. It takes about 30 days, 30-day waiting period for a flood policy to take effect. As you know, if you're trying to get flood insurance when there's something out there stirring around in that Gulf, they will not write you anything. So it's best to, while we have nothing going on from January to June, you need to try to figure out in your budget if you can really afford flood insurance. The average cost of flood insurance, I want to say this is an estimated cost, is like $734 a year. Okay, so I would say if you can afford to get flood insurance, get it. We're not going to even talk about flood zones, because we've noticed in the past years that it floods outside of flood zones. Okay, so it's just a great idea to buy your flood insurance, and not so much just for your structure, but for your contents too. Okay, your lender will require that you get flood insurance for your structure only, especially if you're in a high risk flood zone. But I'm stressing today to all of my listeners that you need to get it if you can afford to get it. Because this is a great idea to have it. When you think about flood insurance versus no flood insurance, basically you're looking at $734 a year versus you being at the mercy of the federal government. And basically, you know, they may give you a disaster grant that may give you what, $500, is it $5,000 or $500? I'm not really sure about the grant amounts for the federal government, but it's best to have your own if you can get your own. And I would tell people all the time, I would better you have it than not need it, than need it and not have it. So if you can afford it, get it. You contact the National Flood Insurance Program at the number provided on the slide, or you can or you can call us our agent. Get your agent for your homeowners insurance company, and they'll be able to sell you an insurance policy through the National Flood Insurance Program. We can't stress enough that it's very important that you would get flood insurance. We live in a catastrophic state, y'all. We never know what is going to happen. That was a serious flood that occurred in Baton Rouge, Louisiana in 2016. They had areas that flooded. There was no way on the flood map saying that they were in a high risk flood zone. They were not. So I would stress that if you can get flood, please do so. Okay,
Sharon, I want to thank you for that additional preparedness message, because most people don't think, they look at, okay, didn't get it, but I see something brewing in the Gulf. But it's important to know that 30-day waiting a period does take effect. And the additional preparedness message that you talk about, that well, I've never flooded before. I mean, we're looking at drainage issues and more severe
exactly
ever have. And my boss usually says, if your driver's license has LA, you live in a flood zone. So I really appreciate you encouraging listeners to do that.
Yeah.
And he provided a 1-800 number to the National Flood Insurance Program. That's 1-800-638-6620. That's 1-800-638-6620. And I just wanted to share that because we do have some callers that are actually on their phone listening to your presentation. So I'm going to go forward your next slide.
Okay, thank you. So now, when we think about replacement costs and we think about actual cash value, this is how your policies are going to be set up when it's time to do to cut the check, okay? Reimburse you. This is how we're going to do it. If you have a replacement cost policy, then that's the cost of replacing your items or your home without deducting for depreciation. For example, if the cost of a television, as I state here, that you bought 7 years ago was $2,000. Well, keep in mind, with the replacement cost, you will get the full amount of the cost of the TV back, with the exception though. They're going to do it based off of actual cash value. They're going to do the depreciation amount and cut the check for the depreciation amount. Now, if you want to get the difference from the cost of the TV today and the actual cash value amount, you have to pay it up front and then keep your receipts, and then they'll give you the difference. Okay, so that's how the replacement cost coverage works. A lot of people want to look at the replacement cost coverage and says, hey, they just said it was no depreciation, so I should be able to get the full cost of what I paid for my TV. No, they still use the actual cash value formula. Okay, and look at actual cash value. It says it's the replacement cost amount minus the depreciation, minus the wear and tear of that TV. Okay, so you paid $2,000 7 years ago, you probably only get $1,200, and that's all you're going to get, because that's the type of policy you have. You have an actual cash value policy, whereby if you have a replacement coverage policy, you'll be able to get up to the full cost, but you have to pay the difference out of pocket first, save the receipt, and then they'll reimburse you for the additional amount. Okay, because a lot of people I've talked to, even in the Lake Charles area on the phone, I was not, our division, the consumer advocacy division, was out there at the Henry Heights Community Center, set up to talk to a lot of people about their policies after Laura occurred back in October, I think it was November, September, October, and they had a lot of questions in regards to, why am I not getting the type of money I should receive? And this is why you have to understand how the replacement cost and the actual cash value works. Okay, you will not, actual cash value takes into consideration the wear and the tear of an item over time, whereby replacement cost coverage says, hey, we consider the wear and tear as well, but we still give it back to you once you pay us, once you pay the difference and give us a receipt for it. And it makes sure that what you've paid for is of like kind and quality of the item that was destroyed. Okay, so we just need to make sure that we understand what replacement cost means and what actual cash value means. Okay, all righty. Keep in mind too that the actual cash value and the replacement cost policies are a little bit higher than the actual cash value policy, but you know, in the long run, you are able to get all of your money, you know, concerning your items that you lost. Okay. All right. Next slide. So let's look at preventive home maintenance. This is something that I touched on earlier under your exclusions, but this is something that it is imperative that you do prior to a disaster. Let's do some home maintenance before disaster. Let's inspect our roof. Let's make sure it's ready to stand up to the hurricane season. Okay, a lot of times we don't do that, and then we find out things about our roof that we don't like to hear when the adjuster comes after a disaster has occurred. So I'm getting you to telling you now to inspect your roof prior to your hurricane season, just to see how strong it is and what it can stand up to. Check your gutters. Clogged gutters can cause your roof to leak and infiltrate water into the home. These things sometimes we take for granted, but check your gutters to see what's going on with your gutters prior to hurricane season as well. Trim or remove your trees, branches that overhang the house, and remove dead, dying, or diseased trees. I can't stress that enough. Dead, dying, or diseased trees. A lot of times, hey, you're mad because the claim was denied, but that tree was not in good shape prior to the actual disaster that occurred. So it's important that we check all these things out before a disaster even come towards us, or before the season starts. Okay. Install a home surge protector that will keep electrical equipment safe from power surges. Okay. Complete a home inventory list. I can't stress this enough either. You got to take time out to do two things for me. Number one, I want you to read your policy, know your policy, understand the policy language, but also take time out to sit down and make a home inventory list of all that is in your home. Because what's going to happen if a disaster occurs, you can pull out a simple flash drive and it will tell you everything you pretty much had as you look around and observe that has been destroyed. And this makes it easier when you file your claim, and it makes it easier when the adjuster comes. Okay, so we are stressing that you would please complete a home inventory list, store it in a safe place, and also update it quarterly, monthly, yearly, whenever you buy stuff and need to add to it. Don't forget to update to your list, because it's going to make your claim processing so much easier. Next slide. So now let's get into the post disaster steps to recovery in the role that insurance will play. Okay, after the storm, we got to clean up. Okay, no matter how much it hurts to see your house destroyed, you still got to get your mind intact and say, hey, we got to move forward. Okay, so the first thing we say to you is to contact an agent or contact your insurance company to report your damages as soon as possible. Make sure you know the name of your insurance company. You'll be surprised that people don't know their name, and then under distress you can't remember anything either. So we're asking that you, hey, keep that deck page handy, because all the information you're going to need to be able to file that claim will be found on that deck page. When it's safe and orders to return are granted, inspect your home for damages. Be safe about it. We don't want you to go out there expecting any damages and, hey, you hurt yourself. That's not what we want you to do. We want you to make sure it's safe for you to be able to be out there and inspect those damages. Open your windows up and your doors to dry out your house. You know, the quicker you dry your house out, the more you're saving your house at the same time. Okay, take pictures and the video of the damage that occurred both inside and outside before you begin to clean up. Okay, take pictures, take many pictures as possible. Let me tell you something. You may have to even file what you call supplemental claims. Because this man came out today, he may not see it all. You may not see it all. But as you continue to inspect day after day, you may find things. Hey, it's okay to file a supplemental claim, okay? If possible, make temporary repairs to your property to prevent further losses and to secure the property. This process is called mitigation. I know you guys have seen where FEMA have come in to assist and they cover that roof up with that blue tarp. That's called mitigation. They're preventing further damages from happening. I need for you to board up those windows. That means you're preventing anything else from coming into that house. Board up the doors. Do what you have to do to prevent any further losses from occurring. And the process is called mitigation. Next slide. So the claim process, it can be simple. It can be real simple, or it can be kind of like a nightmare for people. But we want you to understand the claim process and what you need to do. To file a claim, like we mentioned, you need to contact your insurance agent or your company as soon as possible. Ask about forms and documents you will need to support your claim, okay? Document your damage. We can't stress that enough. Take your pictures. Get your children to take pictures on their cell phones. Video if you have to. Document your damage. You may be required to file a satisfactory proof of loss, and your adjuster or insurance company can help you with that. And that's basically saying you signing off on a form that's saying these damages did occur. That's simply what that's all about. I did have these damages to occur to me during Hurricane Laura. If the cost to repair the damage is not much more than your deductible, you might want to pay for the repairs without filing a claim. Okay? So if the cost to repair your damage is not more than if your deductible is more than your damages are, hey, you just may want to take your time and try to take care of those damages on your own, okay, without even filing a claim. Next slide. So here's a timeline so everybody will understand how adjusters come out and how the insurance company pays your claim, okay? And then how long you have to file a claim. The timeline on adjuster. Adjuster normally has 14 days to assess the damaged property, and in case of a declared state of emergency, such as a presidential or gubernatorial disaster, such as a hurricane, he has 30 days to assess the damaged property. Anytime after that and you have not heard from your adjuster, you can file a complaint. Please refer to revised statute 22-1892 A3. It'll tell you this. He has 14 days to assess your damaged property, but in case of a disaster, he has 30 days. That means he has a lot of people he's going to see, so we got to give him a chance to get to you, okay? An insurance company has 30 days to pay the amount of claim after receipt of a satisfactory proof of loss from the insured. Once you've signed that said that you have sustained these damages, this loss has occurred for you, and the adjuster has been out, we're giving the insurance company 30 days to pay your claim. Revised statute 22-1892 A4. And then lastly, the insured, when there's a catastrophic event occurring and civil officials declare a state of emergency, the insured shall have 180 days from the date of the event to submit a proof of loss claim with the insured. That's revised statute 22-1264. That's almost 6 months that you have to get a claim filed to your insured once a catastrophic event occurs. Because we do know that when it occurs, there's not a lot of adjusters on the ground. Okay, so it takes a while for people to get everything submitted to the insurance company, and they're giving you extra time to actually do that. Okay, so these statutes are very important. You may want to jot some of them down. I'll tell you once again, an adjuster is revised statute 22-1892 A3. He has 14 days to assess your damages. However, in a case of an state of emergency, he has 30 days to assess your damages. Insurance company has 30 days to pay the amount of the claim after receipt of satisfactory proof of loss from the insured. Revised statute 22-1892 A4. And the insured has 180 days from the date of the event to submit a proof of loss claim with the insured. Revised statute Oh my God, I can't see it. Somebody popped a question up and I couldn't remember what the revised statute 22, I'm sorry, 1264. Okay, next slide.
I want to just tell you, you said some great information and actually backed it up with the legal statute. I want to thank you.
Yes, ma'am. Yes,
But
ma'am.
I
Yes,
also
ma'am.
asked you, you know, we did have, you know, the pandemic has really kind of hindered a lot of the survivors. So
Yes, ma'am.
let me ask you, you know, and you know, there was a lot of folks displaced, which is not unusual for a hurricane response and recovery. So it says the insured has 180 days. So if you hadn't, a lot of them had to go to New Orleans and non-congregate sheltering. And so
Mm-hmm.
if they hadn't had an opportunity, they may
Opportunity.
have had an opportunity to get all their documentations together. Is there
Mm-hmm.
flexibility for that, like a working process? They may have contacted their insurance provider, still haven't gotten all the documentation submitted for proof of loss. What would you recommend there?
I'm not really sure if there's any extra circumstances for people in that particular situation who had to be mandated out and then the house is totally lost or whatever. I would say I've known people to get legal experts to come in and assist them. So I really don't know. Rachel, are you on here? Can you give me do you know some insight on what would happen in this situation?
Well, the law doesn't address it, but in real time,
Okay.
what I've been seeing in Lake Charles is that 6 months isn't long enough to repair everything. It takes about 18 to 24 months on average. And so, in real time, most insurance companies, as long as you've submitted that first claim, that's kind of within that 6 month time frame
Mm,
because they know you're going to find additional claims from there. Now, we don't have a law that addresses that, that gets that specific. So that might be found in the separate policy language. And so that's
mm,
going to be different for
okay.
every insured. And so I would refer you to that policy language in that contract.
So they just really need to kind of really talk to their insurance provider and work that out.
Mhm.
I did have another question come in as we were talking, and the participants indicated what happens if something happens that an inspector did not see when they first did an inspection. For example, after flooding occurred and 4 months later it rained and rained and the side of the house collapsed. So is there any additional, I guess, supports relative to that insurance claim, or how would that be addressed?
So the question is that the inspector didn't see the damage, the homeowner didn't see the damage, and after 4 months of just sitting there, the house collapsed. You're telling me?
Yes.
Okay. That to me, I would think a supplemental claim still should be filed. I think that somebody should send somebody back out again to inspect that, because it was oversight on, hey, not only the homeowner's part, but even the adjuster who works for the company. He is what an oversight on his part. So I think that the adjuster should come back out again and inspect it and see what was going on and what made it collapse like it did. And I think that that claim should be paid by that supplemental claim should be processed by the insurance company.
All right. Thank you.
Okay.
I'm gonna go ahead and advance.
Hello.
Okay. I just advance. Thank you, Ms. Arnold. And I'm gonna
Okay.
and thank you, Ms. Rachel, for also contributing to those questions. I've just forwarded your next slide.
So these are some of the frequently asked questions that we get, especially since after Hurricane Laura, Hurricane Delta. I think it was Zeta was the last one. How long would it take for my insurance claim to be resolved? Well, basically, this is how it works. If a substantial damage involving your home and property, an insurance claim is not going to be closed with a single payment. There will be claim payments for various parts of your claim as the rebuilding process moves along. Most people find it takes at least 18 to 24 months to repair, rebuild their home, and replace their possessions after a major disaster. Your insurance claim will stay open until the insurer has made all payments you are entitled to under your policy. So that's it, cut and dry. That's the answer to that. Hey, how long would it take? It could take up to at least 18 to 24 months to rebuild and to repair. Next frequently asked question.
Yeah. Yeah,
Okay.
I know that that is a long, I mean, because people, and I
Mm-hmm.
we want it immediate, and we want it to be addressed. So it is a process. So thanks for actually reiterating that. The other thing is to really have a plan of action, as you kind of have talked about, checklists and different steps to take. I don't have any
Yes, ma'am.
right now. I'm gonna go ahead and advance to your next slide.
Okay. What if I'm not satisfied with the amount of my insurance payment? Well, your payment won't necessarily be the same as your neighbors. You know how we talk to each other and they say, well, I got this amount, girl, and how much did you get? So because number one, your coverages, your deductible, your policy limits, they vary. Even if the damage looks the same, it depends on how much coverage you have on your home. Okay, what is the dwelling amount? Well, how much replacement cost did you get to replace your house back to whole status? Okay, so that is one thing we have to keep in mind. When everybody's payment is not going to be the same, so don't compare your payment to your neighbor's payment. If the insurance company denies any part of the claim, ask for the denial in writing. Please keep all your paperwork. And that's another thing that we find when they contact the Department of Insurance. They want us to tell them why the claim was denied. Well, we ask, did you contact the insurance company? They have the answer. Now, if you contacted them and you still was not happy with the answer that they got, we can do that. We can contact them on your behalf and sit down with them and then sit down with you, okay? However, you need to get them to identify and tell you why parts of this claim was not payable upon submission. Okay, and keep all the paperwork that's involved with it. Once again, if you don't believe that the offer is fair, you can call the insurance company, but be prepared to explain why you think the offer is unfair. If you're not satisfied with the response, like I said, you can contact the Louisiana Department of Insurance and we'll be more than happy to assist you. Next question. What if the insurance company doesn't agree with the damage estimates from my public adjuster or my contractor? Simply put, there are differences in construction estimates, and it's common, okay? Ideally, you and the insurance company should reach an agreement on a scope of the loss. This is a detailed list of the quantities of construction materials, labor, profit, and overhead, building code compliance, and every single item required to repair or rebuild your home. Once you've submitted all the information that your insurance company needs, including written estimates from the contractor, the adjuster will calculate the total cost. If you disagree with the claim amount the adjuster has calculated, you can settle this disagreement without going to court through an appraisal or arbitration. Okay? So we do get these questions pretty often that they don't agree with what the estimates from the public adjuster or the contractor. Hey, well, it's time for you to sit down. Oh, I'm sorry, we get this often that the insurance company is not in agreement with the damages from the public adjuster or the contractor. This is your solution. This is what you need to do. You need to talk to your insurance company and see how they can come to some type of agreement. Okay. So we are here. The Louisiana Department of Insurance is here for you. If you feel or believe your insurance company is not handling your claim properly, you can file a complaint with the Louisiana Department of Insurance. We determine whether your insurance company has followed Louisiana law and abided by the terms of your policy in processing your claim. Once again, we can't stress enough, it's all about the language, the language policy in your contract. You have to understand that, okay? And oftentimes we find out that you just simply don't understand the policy language. So we stressing right here and now that we want to help you understand. Our doors aren't quite open yet due to the pandemic. But hopefully in the next couple of months, we'll say you may be able to come to the Department of Insurance and sit down with one of the specialists and discuss some things in regards to the term of your contract, okay, in terms of your policy. So feel free to call our office at 1-800-259-5300, Once again, 1-800-259-5300. You can speak to an insurance specialist and they'll be able to assist you with any type of problems that you have regarding your claim. Okay. All right. Next slide. Oh, and I'm sorry. And the way you can file your complaint online, you can go online, and you can do it online from our webpage, or you can, if you don't want to do it through the online process, you can print down a printable version and you can send it to the Department of Insurance. Okay. Or if you just want to have an inquiry, you got a question real quick, call us and speak to one of the insurance specialists. Okay. All righty. Next slide. And that concludes our presentation for today. I hope that something we said or I said today that you guys can go back and make note of. We want to stress before we leave, our 2 key takeaways for the day was, number 1, read that policy. Please, I know the language sometimes is kind of confusing, but I need for you to know what is in your policy, because if there's something that you need to have and you need to add, make a change to it, hey, this is a good time to make the change to that particular policy. And keep in mind that the insurance company's primary goal is to make you whole, not to make you better than you once were, but just to make you whole. Okay. All right. Thank you so much. I am, again, Sharon Arnold, and I'm with the Louisiana Department of Insurance. My direct unit is the Office of Consumer Advocacy and Diversity, where our Deputy Commissioner is Mr. Ron Henderson. So we just thank you so much for giving us the opportunity to come in today and to talk to our constituents about disaster recovery.